Hello again, everybody. This is Dr. Richard Smith, and we are back for another weekly Q&A session following up on your great questions as you digest and make your own the lessons of the 7 Principles of Investing Masterclass. So again, we're just getting started, but we are well underway. Your questions continue to really inspire us, and to help make sure that you get answers, I'm here again with Josh Rhodes from Roads to Wealth. Thanks, Josh. And how's it going?
Richard, I'm doing well, man. Thank you very much for having me. Happy Friday. Good to be back.
Likewise. And yeah, so what do we got? What are we talking about this week? What's on
let me just
everybody's
say,
mind?
Yeah, that's what I wanted to start with. Is typically I have a queue of questions I'm able to pull from weeks in the past, but last Friday, we spent some time talking about emotions and money script, and based on the questions I received this week, I feel like it kind of hit people where they needed to be hit. And so I had several questions submitted over the last 7 days that are a bit more personal, which was enjoyable. I think we'll be able to unpack some really cool stuff. I wanted to start with maybe just some of the ruckus we've had over the last 7 days. This past Monday, we saw the worst trading day we've seen in 9 months since last October. The Dow dropped 2.1%, 726 points. A couple questions of just, do you have any thoughts on what happened, the variables that sort of controlled this? And then more specifically, in a case like this, we see the worst trading day in 8 months. What does Richard do on that day?
Well, for one thing, I've been sort of anticipating this day for a while, right? Because I follow the markets closely. I know that there are internal dynamics in the markets where, for example, the major indices are going up, but a lot of the small caps and more growth-oriented stocks are not doing so well. So there are internal dynamics that call, the current rally into question on a short-term basis. And then that's also entering into a period of seasonal weakness where the end of July, early August is typically a weak period for the stock market on average. Seasonality is something that we talk about at the Foundation for the Study of Cycles. I learned about it from my friend Jake Bernstein. And it is a real thing in the markets. So I also follow a guy named Tom McClellan. He's the son of Sherman McClellan, the McClellan oscillator. I don't want to get too deep in the weeds here, but he writes a great newsletter that I track basically on a daily basis and really shows the seasonal influences in the market. And so, this was not unexpected that there was going to be a correction. The market was kind of ripe for it, and it was seasonally the right time for it. What was really interesting to see, though, was the media, wrap an explanation around it, because they don't know, nobody really understands seasonality and why it works and keeps working year after year. It's kind of weird, but doesn't fit with our sort of, logical, scientific cause and effect way of thinking, that we have to have an explanation for everything. So anyway, the market, the media glommed onto the Delta variant as the explanation for this crash, this correction, right? It's just these cycles of psychology, group psychology, herd psychology in the markets that lead to these ups and downs. So I think this was a cyclical, psychological, seasonal movement that the media, created an explanation for, but it was healthy. It shook out a lot of overly bullish sentiment. And, I would not be surprised to see some more of it over the next couple of weeks. So what am I doing personally? I'm not selling, but I'm not buying more right now either, because I already bought my full position, right? If I was just getting started, like some of the people in our masterclass, and I had put in 25%, let's say, and I wanted to put in more over time, a dip like Monday would probably be a time that I'd be like, yeah,
The
cool,
Black Friday
right?
sale at that point.
I
Yeah.
get to, I've got some cash, time to put it to work. I'm getting a discount today. So, nothing real fundamental has changed. I still think the economy is recovering. I think the growth is going to be and inflation are going to be more than what people are expecting. And I think that, there's still a tremendous amount of money being printed and stimulus being contemplated. And that money's got to go somewhere, and it's not going into the banks because we're not getting paid any interest on our savings. And so people need to get it into some kind of asset that can continue to grow while we see, moderate to possibly immoderate inflation.
I love seasonal weakness. That's a term I'm not sure I've
Yeah.
heard before.
Yeah.
Mike, one of the subscribers, one of the followers here, asked a question around this. Again, not using that term, but I think it's a perfect segue. He said some market analysts believe that volatility always increases in the summers. Things get a bit more irrational. He says,
Mhm.
why is that? And how can you determine a 1 day cycle versus a monthly volatility cycle or some sort of seasonal cycle?
Well, if people are really interested in cycles, you should go to cycles.org, the Foundation for the Study of Cycles. It is a not-for-profit. You can subscribe and become a member for like $149 a year, and you get access to a really powerful cycles analyzer. So that's a great resource if you want to really get into cycles more. In terms of 1 day versus 1 month, I mean, the 1 month stuff is pretty easy. If you just Google seasonality and you can find free stuff out there. Maybe I'll try to find something that could be shared as a link with people. But if you want to get into shorter time frames, you really got to start to get some software and take matters into your own hands. But right now, the summer is a time when there's not as much active attention on the markets. A lot of people are on vacation, and there's a little less liquidity, I guess. I'm not sure liquidity is quite the right word, but yeah, you can get more volatility because, let's say, some of the bigger players, the stronger hands, are not paying as close attention and not focused as much on it as they are in the non-summer months when they're not on vacation, right? So again, we don't have great explanations for these phenomena, but they do keep happening year after year. And at a certain point, you just have to ask yourself, do I need an explanation for everything, or is history a sufficient explanation?
By the way, I know we're giving good guidance, good information, because several questions that are coming in now, I'm having to sort through because they include information from some of your cycles studies. They're going out and finding other material and pulling it in and say, let's talk about this. So
Yeah.
I appreciate everyone going out and doing their homework and making this a bit more fun to be able to put these questions together.
Yeah.
Dennis asked a question that, again, around just sort of what has happened this week and emotion that I thought is a perfect example of just sort of real-time people movement and in action. Dennis says, thanks for the opportunity to ask a question. So thank you for the question, Dennis. Monday afternoon, I sold 30% of my stocks. Says, of course, now looking back, I realize I should have kept them. At least that's what the short term is telling me. Is there a way to distinguish between emotional decision-making and protective decision-making? He says, I know there are times that I should sell, but how do I really know when that is? I think that's such a good question.
I mean, you certainly have to develop a level of self-awareness and emotional awareness. Some of it just comes from sitting still.
Mm.
We've heard of practices of mindfulness, but we have to put stops and pauses in between the events in life. We have to be able to stop and reflect on what we did, check in with ourselves, see if there's like inner anxiety and agitation that are driving our decision making, or if it's, pretty sober and long-term thinking and consistent with our plan, right? Or driven maybe by something that we saw, like the media is hitting us with something, in this case, there's a real event in the markets, a 3 or 4% correction especially in small cap stocks. But, the explanation that this is the beginning of the end, right? And that COVID is resurging and the Delta variant is going to kill another 500,000 people. No, where did that come from? It came out of the blue. Didn't really have a history to it. Definitely draws us into the media, who is not our friend. They don't have our best interests in mind. They're just doing their job and trying to get eyeballs, right? But that doesn't lead to long-term success. So, I do aspire to eventually developing technology, or I should say leveraging existing technology that can help us see these patterns in ourselves more clearly, because they are in the data. They really are, and this is what Google and Robinhood and Facebook see about us. They see when we're being impulsive, they see when we're reacting to short-term stimuli. I would love it for us to be able to see that ourselves, because, but right now, all that data is in silos. Robinhood's got it, and Google's got it, and Facebook has it, and Apple has it, and Tesla's has it. These are these kind of walled gardens, siloed data warehouses that are basically building behavioral profiles on us. And they know more about us than we know about ourselves. And that, that technology really should be in the hands of people, and not in the hands of, for-profit entities that don't really have our best interests as their primary motive. So that's going a little bit down the rabbit hole, but I do aspire that as we grow as a community and as, users of technology, that we can develop some of those tools that will help us kind of, flag those moments, like maybe you didn't sleep well on Sunday night, and then you're faced with a big event on Monday, and you're not in your optimal, long-term thinking stage, right? You're more prone to reactions. So, that data is actually in your Fitbit or your Garmin or, your Whoop, or in your mattress, but we don't really leverage it right now. So leave it at that. It's a tough question. In the short term, the best thing is, Dennis, that you have a plan, you've formulated a plan, and you stick to that plan, right? So right now, the plan that we presented in the masterclass is, hey, 12 to 20 stocks, only look at them quarterly. Don't put in more money in than you're going to be uncomfortable having your portfolio correct that much, in a day. So I don't think Monday was outside of the scope of the kind of volatility that we had been talking about. So, that would have been like, oh, ouch. That would have been a D-Day, right? Ouch, that hurt. But, I knew that was the price of admission. Let me sweat it out. And then sure enough, Tuesday, Wednesday, but Dennis, it may, we'll probably see new lows before these summer doldrums are over. You'll get justified. You'll feel like you're a smart guy, but really the thing is, have a plan.
Yeah, man. And I think when you started your answer, you started with just breathe. And I think that's so important too, we've talked about the media influence and social influence and community influence and all these different noises and things tugging on you. And I think the question of, you sold 30% of your stocks on Monday. Why? Right? Like what drove you to do that? Yeah. And if it's folks on Facebook saying, we have got get as much liquid cash as you can, things are going crazy, then it's probably for the wrong reason. But to your point, if if we've followed the plan that you've laid out, you have frameworks and you understand where your losses are and where you need to get out, then this is a very scientifical decision, right? You understand once it gets to this point, I need to execute for these reasons. And it's, you're sort of removing the wrong emotions out of it. Back to last week.
Yeah, definitely.
Man, love that. Jason asked us a question that I have to be cautious around. I want to ask you the question directly, and then I'm going to reframe it.
Okay.
The question that Jason asks is, my mom wants to start a investment fund for my 4 kids. They're going to seed each account with about $2,000. So talking about kids, they're less than 5. So I'm wondering if Dr. Smith has any recommendations on long-term investment portfolio, thinking about purchasing stocks with dividends to help them grow money long-term. Now, this is technically, I think, as close to asking for personal investment advice as I could get. So I'm going to try to reframe the question a little bit and ask, if you were in these shoes, if you had children and they were 2, 3 years old, you had $2,000, $3,000, $5,000 to spread across them to try to get them. I mean, they have so much time in the market. They have 30, 50, 60 years. What is that investment process? Do you have any ideas, a framework, something that Jason could be thinking about of how to buy, hold, keep? What sets them up? What's the best decision here?
I mean, I think an opportunity like that is where you really do want to take a little more risk, because you do have, a longer time frame to have that risk pay off. And so I'd be looking into what are some of the really big trends that are likely to be able to play out over the next 10, 20 years, and find ones that you're comfortable with and that resonate with you, and some of the things that are coming to mind are biotechnology, even robotics, cannabis. There are big trends, right? Bitcoin. Now, these aren't like dividend paying stocks. To me, these are growth opportunities, right? And maybe it's not an individual stock, but maybe it's an ETF. Maybe Kathy Wood's ARK fund would be an interesting, thing to look into, right? So, for me, I'd want to really invest in the future if I were looking at a 30, 40, 50 year horizon. And so, dividend paying stocks, that is one way to go. But it's really, that's where it gets personal, right?
Yeah.
So I'm telling you what my inclination would be, but your situation may be totally different. And that's a big part of why, we do what we do. We want to give people the ability to invest in their comfort zones, and help identify their risk tolerance and personal values, and then allocate their capital in accordance with that. So, this is a great opportunity to go into some of the 13F filers that we've shared in the app, look at the long-term success stories, find out some of their stocks that they're interested in.
Yeah, I love the idea. Find a couple growth stocks, find out where the puck is going or where you think the puck is going, and get ahead of that, and then let your children reap the benefits of that. You showed me something offline before we started recording that I can't stop thinking about. We didn't have this planned, but I'm going to put you on the spot. We'll cut it out if you don't like it. But you showed me a few histograms earlier of GameStop and then Dogecoin. And I'm, rather than asking a couple direct questions on it, I'm wondering if maybe you could show us those and then tell us some of the conclusions you've drawn, or what this means to you, what this means to us. They are really, really cool graphs to see. So would you mind sharing those with us?
Love to. So the reason I put these together is because, I'm following closely Robinhood, and I'm concerned about Robinhood's business model, and what where they're leading their users. Okay. So Robinhood is, in the news now because they're going to do an IPO. and they had to release more data about their business and how they make money. It's called an S1. So, what we found was something that I had actually been predicting for a while, that they were going to make a ton of money in the first quarter of 2021. That's when the GameStop episode unfolded. And Robinhood sort of positioned themselves as almost like a victim of this GameStop episode. Meanwhile, I think they actually perpetrated it, because it was the perfect storm of profits for Robinhood. They made a fortune on the GameStop episode, on the GameStop frenzy. So what I've put together here, this is called a histogram. It's really a frequency count, okay? So this is the, over the first quarter of 2021, all of the daily gains or losses in Robinhood, in GameStop, okay? So over here, this is the number of days in the first quarter. It was like 23 of them, I guess, where GameStop lost 5% or more, okay? And over here, this is the number of days in the first quarter of 2021 where GameStop gained 5% or more. And in here in the middle is kind of like -4%, -3%, 2, 1, 0, okay? And then +1%, +2%, +3%, +4%, +5% or more. So what we see here is what's called in statistics a fat tail distribution, okay? GameStop was just, ping-ponging everybody around between big losses and big gains every day, okay? And this is an environment that people can't make any sense out of. You've probably heard of the bell curve, Josh. The bell curve is the normal distribution. It looks like a bell, right? Peaking in the middle, coming back down, very skinny tails. This is the exact opposite. This is like an inverted bell curve.
Yeah,
and it's not normal, right?
Tails.
These are the fattest tails possible. It's not normal. It doesn't align with our expectations of how the world works. It creates cognitive dissonance, and it makes us react. Going back to Dennis's question, right? I sold 30% of my stocks on Monday. That was a reaction to a fat tail event, to a tail event. So something that doesn't usually happen, but when it does happen, it's kind of shocking. So meanwhile, this is the shape of profits for Robinhood. This is the kind of dynamic that they're incentivized to create. And it's not just Robinhood, this is the media, this is Google. This is like distorting our expectations of reality so that we are off balance and that we make reactive decisions, which then, more trained, sober decision makers ultimately arbitrage and benefit from what's called reversion to the mean. So this is GameStop. Let me show you one other. It was Dogecoin, right? Which was another big winner for Robinhood. This is the second quarter of 2021. They're going to make a ton of money in cryptocurrency trading and Dogecoin in the second quarter. I guarantee it. And, you can see it in the data right here. Dogecoin did this, what I call ping pong, or it's actually in the gambling world, it's called slot machine structure, right? So you can't really predict if you're going to win or you're going to lose. It feels very random, and it leads you to basically get big dopamine hits when you win. And those become kind of addictive in the short term, and you want to experience it again. And you end up just pulling the handle on that slot machine over and over again. And that's what Robinhood is doing. They're creating a slot machine stock market, and they profit from it. They can talk about how some of their people buy and hold, but the way they profit is off of these market structures. And so they're incentivized to create them, to gamify them, to lead people into options trading, to lead people into cryptocurrency trading. And so this is what they're doing, and you may think as a Robinhood user that you're doing it, but they're actually subtly presenting these opportunities to you and drawing you in and intriguing you about it so that you do it. And then you think that you did it because you wanted to, when in reality, you're doing it because it's profitable for them. So unfortunately, that's the world we're living in. And really, like, this can't be regulated out of existence. We have to educate people about it, and then they have to begin to choose for themselves whether this is, the future world that they want or not, right? So I don't trade Dogecoin. I don't trade GameStop because, I'm ethically against these kinds of phenomena in the markets. I don't think they're good for anyone. And it's certainly not the world that I want to, help create for my children and my grandchildren. So this is what's going on. This is what people have to get woke to, right? That this is, the shape of risk that the platform owners, the media companies, the broker dealers profit from, and most of us don't.
That is first, thank you for walking me through that. An incredible graph. If people think those that took your masterclass, that have gone through your course, we'll remember when you covered histograms for the first time and you pulled up, I can't remember what stock it was, but there was a very impressive histogram, and people remember. I think you called it maybe a sailboat, or the sail of a sailboat is sort of the frame you're talking about. You called it a bell curve there, but the middle was real steep, just like the fat tails did. The tails were in the middle, and it's sort of just very easy, curved off to the right. That's what we're looking for. And then you see something like that, and that just screams noise. It just screams noise. Thank you for walking me through that. We've talked about histograms, and I wanted to close with that question caused some excitement. I want to close with something a bit more positive. Charles gave me what is the future of Richard? We've gone through a masterclass. We have access to an app. Is the idea to continue to add to this app? Are you going to start charging for the app? We saw a book on your website. Is next a book? It seems like you still have things in flight. What's next for you?
Well, I am writing a book, and really, what I just shared about the histograms, for example, that is a view that I want more and more people to incorporate, into their suite of tools to help them make sense of what's going on in our world. And, I want to educate people, and I want to empower people with technology to see our digital reality through a new lens. And I think a lens that ultimately empowers us as individuals and takes power away from the centralized, administrators of this new technology, who are, using deceptive practices, not telling us the whole truth, not being transparent, changing algorithms on the fly, having us sign all these terms and conditions that are impossible to read and that we don't understand, and then basically let them collect all the data on us that they possibly can. So I would like to turn that upside down, right? And part of it starts with getting together a group of people that want to spend a little time and energy to learn how to invest better, start to build a base for using and developing a new technology that can help to be more effective investors, but also to just interact more constructively with this digital reality that's being built, fast and furious every day all over the globe. And we really need better tools to be able to hold our own in that environment. So that's, to me, is the overriding direction and goal, to educate people about what's happening, and then to provide supporting technology to allow them to kind of better monitor what's going on and make decisions that are more consistent with their own values and principles and the future that they want. So yeah, it feels a little loose sometimes because, these are uncharted waters. So We have to feel our way as we go and trust in the ultimate aim we have to be more effective leaders and influencers in our own lives and in our own circles, and to develop the tools, which don't really exist right now to be able to really influence things instead of being influenced by others.
Mm. I'm looking forward to the progress and excited to be a part of it, man. Thank you
And we
for
are,
the
there is a lot going on with the app and technology every day. So just want to be clear, that is a big part of what I believe is the ultimate destination.
Yeah, I've continued even since launch through the Slack channel. See people give feedback on, hey, here's a little bug, or can we add these stocks?
Yeah.
And things have been flipped around on like a 24-hour time frame. It's moving at
Yeah,
a hyper speed right now.
it is. And still, I ask everybody's patience. It is a little slower time. People are on vacation in the summertime, like we talked
Totally.
about before in the markets. But we're really building a foundation here, and really appreciate everybody's feedback and engagement, because that's how we're going to build something that works for everybody. So we're at the seed stage right now, but very encouraging. And, we do have a vision that people clearly appreciate, and that we can grow organically our user base, our community, and really create something that I think will not just change investing for good, but change the internet for good.
To that community, thank you all for continuing to submit your questions. Several avenues to where you can apply those throughout the next week-ish. And Richard, thanks for having me back, man. I really enjoy these Friday sessions. I learn something every week.
You do a great job, Josh. Appreciate it. Thanks, everybody. Bye-bye.